For it. All right. So my question is how do you know when to use the VWAP and when to use the Don chain? Because I noticed was Friday and Thursday you switched it up and got off the VWAP and started using the Don chain.
Okay, so the only time I really use the Don chain is when the market is at an area where I can't find any levels. So,
Ah,
for example, if you look left, we had a big drop one day. Uh, it was what day was that? It was one day where we had a big drop in the market, and anytime there's a big drop, like right here. Okay, so if you look at this, this is a 4 hour chart. But because of this big old drop back here, there wasn't a lot of levels in this little spot. You know what I'm saying?
are
So,
you sharing your screen?
I'm about to say I
oh,
can't
not,
see
oh,
either.
I don't think I'm sharing it. Hold on.
I didn't even know you have to pay attention to that. I thought you just use whatever levels. Thank you, Z, for asking.
Yeah, that's why we ask questions. So, other people might not know to even ask. So, all right, where's my little drawing thing? Oh, here it is. All right. Annotate. So, since we had this big old drop right here, right? We had a big old drop. There wasn't a lot of levels in here in this big old zone because this is a 4 hour chart. So there wasn't a lot of levels popping off in here. All we see is this 4 hour level, this 1 hour level, and all the way down here. So what do you do when the market is, you see how the market was just playing in this area right here, but there's no levels in the past. That's when I put the Don Chain channel because it'll show me the higher high and the lower lows within that area where I can't see any manual levels that I would mark up.
Okay,
So,
so why would you, okay, this is my next question then. Why wouldn't you use a fair value gap there as a level? Well, I see it right there
but yeah,
actually.
I still use the fair value gap as well, but I don't want, that was the only thing there was the fair value gap. So by having a Don Chain channel, it'll give you an area, you have the high, the low, and you have the median. So you can take trades based off of that. When I only really use it when I don't see any manual levels that I can take trades from.
Okay.
So,
You turn them
or when the
off.
market is at an all-time high, especially when the market is at an all-time high, there's nothing left. You can't look left because there's nothing over there. So I'll use the Don Chain channel to kind of help me guide through that whole debacle. So I mostly use Don Chain when I don't see any good levels that I would mark off.
Okay.
And that's all the indicators really help you do. Like if you could physically see levels based off the candlestick structure, that's great. Those are manual levels that you have to put a line there. But the indicators just help you when you don't see anything like divergence. You seen divergence will pop up out of nowhere. You're like, okay, divergence. All right, let me take that then. And you'll make $200-300 and there's nothing else in that area to really use as a confirmation.
Okay.
Because the
You be
market
turning the
moves every time the
indicators
market,
off.
huh?
You be turning the indicators off and then turn them on. Or
Sometimes I
you
do like I don't always use the Don chain. You know what I'm saying? I'll use it if I don't see any levels myself. I'll
Mhm.
put the Don chain on to find some levels for me. I always have the divergence running because you can't manually see divergence. You know what I'm saying? That's why if you look at the indicator, it'll say hidden divergence. Sometimes it happens, you don't know, you can't see that is going on. Because every time the market moves, there's a reason it goes up, there's a reason it goes down. Our
Mhm.
job is to know what those reasons are. So if it's moving and you don't know why, because it's been a couple times this week, we chilling and the market just dropped. You're like, what was that?
Friday, actually.
News happening, it just said, you know what, I give up. And it just fell down. It was a reason we just didn't know what it was.
So the Don chain, is it good to think of it as like use that for uncharted territory when you don't know
Yes.
what's going on?
Yes.
Okay.
Because when you use it any other time, it's just extra lines on your chart. And it normally would line up with something that's already there also. It might already line up with a swing high or a swing low. It might already line up with a triple threat that you've seen or a gap strategy that you've seen. So it's just an extra line if you already have levels that are there.
Okay.
But yeah,
Oh,
it's just all different types of reasons you use indicators. It's so many indicators out there, like you can't use all of them.
and then my next question is those fair value gap zones, like that you have right there that's marked off.
Like
So
this
when
right
you're
here.
trading, yeah, those right there, yeah. So when you're trading that, are you getting in on the entry and then because it seems like once it passed the first level whether it's support or resistance and it's kind of in the gray zone, are you taking trades while it's in the gray zone or are you waiting for it to
Not
decide to
not normally.
okay.
Okay, so this is how now this is the thing with the fair value, right? The fair when there's a fair value gap, there's actually three modes of a fair value gap. I only teach the bounce. I only teach right here. It dipped down a little bit into it, but it bounced back up. And then it came down again. It didn't even go all the way to the fair value gap. It bounced up. Now my fair value gaps are different than other people fair value gaps. They call a fair value gap anytime they see a gap, right? I don't count this until I count three candlesticks afterwards because it's just a lot stronger that way. They be count fair value gaps, and the very next candle goes straight through it.
Okay.
And then so my fair value gaps are slight. It's not really a fair value gap. I just call it that because people are used to that name. But a fair value gap, they will count that even if the very next candle touches it. They'll count it as a fair value gap still. I don't.
So you mark them after like one big candle and then like you said ABC.
And then yeah, it's ABC. There's a gap, and then one, two, three. Then I will mark it as a gap because it has to be three candles later.
Okay.
So like and you can find fair value gaps and the very next after the fair value gap is created, the very next candle will go straight through it. So this red one is A, the green is B, and this green is C. A, B, C, and then I count one, two, and three. After this candle right here, this green one, then I will mark it off because now it's at least three candles later. No, let me open this. There.
Okay.
Yeah, right? And you see, by the time it came back down to it, you took a little bit of heat, not that much, but then it took right back off to the top. I mean, that's a big movement to the top.
Yeah, there's a lot of liquidity.
Now, but the it is actually more stages to a gap. You have the initial bounce, that is what I teach. You could put a line at the 50%. So what you would do, you go to drawing tools, Fibonacci retracement, and you go from the top of that gap to the bottom. And it'll mark off, it'll tell you exactly where the 50% is. See, 50% is at 25403.53. So I would put it at 0.50. You notice that 50% is right there where that LIS is too.
Yes.
It's just weird how levels sometimes, are on top of each other. It's literally right there at the 50% of that gap. So the first trade would be the bounce off the gap. If it goes through the gap, I would take a bounce off the 50%, and then I would take a bounce at the bottom of it as well. And I'll take a bounce up. Once it closes on the other side of that bottom, once it closed down here, I would take a short from the bottom down.
So what about the 23%? Would you take a bounce off that?
Nah, I would have took that S1 though.
Okay, okay. But
It just so
wouldn't that
happened the S1 is right there on the 23, but I definitely would have took an S1.
okay, because that's like double confirmation on that one, right?
Yeah.
Okay.
It's just 23% is not normally a level that you would even look at anyway.
Mm.
But because it just so happens to be sitting on the S1, I'm like, you know what? Why not? Why not take it?
So this is not good for like resting orders because if you put a resting order, it could go
No.
through it.
Yeah, I wouldn't do no resting order.
Okay.
And only time I really recommend resting orders is if you feel as though if you have a nice cushion in your account and you don't mind taking a $200-300 negative before it turns around. I really don't like resting orders. I like to see what the candlestick does when it gets to my level because a lot of times it'll get to the level and then it goes straight through it, then it goes back up. Or sometimes it'll tap the top of it like one or two times. If it's bouncing in that area, I'm taking it. I'm just gonna click buy or sell if it's bouncing on it. If it taps it once and then starts moving below that level, I'm gonna wait to see if it turns back around. If it don't turn back around, then I'm looking for a short if it closes on the other side of that level. So like this candle right here, if it would have came down and closed on the other side, I would look for it to bounce down from it.
Mm.
So
I think
that's why
that's what
when
I
I
be
call
making
out a
mistakes
level,
at.
yeah, and that's why when I call out a level, I'm like, don't just jump in because it touched it. Wait to see what it does when it gets there. Because a lot of times it'll tap it 2 or 3 times. If it don't break through it after 2 taps in the same candle, not a new candle, but the same candle. If it bounces up once or twice, I'm gonna buy it because it didn't break through. But if it taps it
Mhm.
once and then the second time it just goes down, I'll wait for it to come up a little bit higher and then I'll buy it on the way up. So it's different. That's why I tell you to work on your entries. It's different ways to enter a trade. You could enter a trade as soon as it taps that area and take that chance, or you could wait for it to see if it bounces once or twice before you take the buy.
Well, I
So
have
what
to
help?
be
Oh,
doing
go ahead.
resting orders, so that's why I'm buying.
I was going to ask you, so what helps you or what helped develop your entries to get better with that?
Um, running sim,
Okay.
well not sim, but playback like we're doing now. I would literally like if I took a bad entry, like if I see okay this bounce good, this was a good bounce, I will rewind it. I will load up this day, and I will take that trade 5 6 times just to see when was the best time to get into that trade. Should I get into that trade as soon as it taps the line? Should I wait for it to go down a little bit, buy it at a better point down here? Should I put a buy here and buy one contract here, one contract here? I tried different strategies, or should I wait for it to dip down a little bit and on the way up, buy it as it's going up, buy it again? You know what I'm saying? And I will see which entry strategy worked better for me, and then that's how I would start trading my entries. You know what I'm saying? Like that's what you use playback for. That way you can rewind it back, do it again. All right, boom. I entered on the way up and I made $600. Okay, let me rewind it. Let me enter as soon as it touched the line. I entered as soon as it touched the line. It went down $400 and then it went up and got me 600. You know what I'm saying? So you could write down. Okay, if I just jump into it immediately, I have to be able to take a $300 hit before it turns around. You know what I'm saying? Because some of y'all stop losses is at 200. So you can't normally do no trade like that if it went down $300, then turned around and made you money. And you also don't want to get in the habit of moving your stop loss away because then it's gonna feel like it's just chasing your stop loss. So that's when I tell you, like, I can't tell you when to get out of a trade. I can tell you an area that's a good area to buy or sell. You that practice on your entry know how you want to enter that trade. Because I know you see me, I'll call a buy and it'll dip down into it and then turn around and make money. You like, man, it did knock me out. I ain't even get to trade.
Yeah, that's the one
Well,
that be tearing me up.
yeah,
Where
because I you got to understand my entry is a little bit different because I might have been running a trading on an account that has a $4,000 cushion or a $10,000 cushion. So that's why I tell you to work on your entry because when I call levels, they're good levels. It's just can you take a $300 short negative? Can you take a $200 negative? And if you can't, you might have to wait for it to dip down a little bit and on the way up take the trade instead of taking it as soon as it touches the line. So it's just that entry that you have to work on. When do you get in based on your account size?
okay.
See
Because
me, I
somebody that's
panic.
trading because somebody that's trading a $300,000 trade account, even if it's an eval or brand new, they still don't have a lot of cushion, but they still got $6,000 versus a 50K account that got $3,000. Well,
But
300K, I think they got like 7,000. It's some crazy number. But that's why some people are just better with trading the bigger accounts than they are the 25s and 50s. That the 25 and 50 be kicking their butt because you got to be more of a sniper on the smaller accounts. You know what I'm saying? But when you can start messing with the 250s and the 300s, you can do 2 contracts and just sit back and chill and go trade another account and just see let that play out. Because with a 250 and 300K account, negative $800 is not that big of a deal. So you got to look at that too. Some people are just better with bigger accounts with their entries. But with a 25 or a 50, you got to be a sniper. You can't take the shotgun approach.
well, so for me, when you were saying like if you sit in and you see it go down for 300, I panic once it start going down and I know even though I know it's gonna go back up, I panic and I don't want to lose no more money. So when I'm starting to lose 300, I just get out the trade because I don't want to lose more. But really, it'll go up like I thought it would go up, for instance.
Yeah, well,
So how do you stop that?
that's why you have to set your max amount that you're willing to risk. And if it hits that max amount, you weren't wrong. You were just early on that trade. You know what I'm saying? You just got in at the wrong time. You knew it was going to go up or down. You just got in at the wrong time. So that's why you work on your entry.
But how do
But
you avoid being early? That's the problem. How do
practice. There's really no way to avoid it. You know what I'm saying? You
Okay.
build a cushion. Building a cushion in your account will help you avoid those smaller losses. But whatever you set your ATM strategy on, keep it at that. You know, because you don't want to have an ATM strategy that's negative $800. You're risking $800 and you only have a 50K account. You should not be doing that. You shouldn't risk no more than 350 on a 50K account when you're in your eval or sim or PA. And that's why I post my results, because you see when I do lose, it's like 200, 230, maybe 300. It's not a lot of times where I lose a whole lot of money, because once I take a L, that account is done. I'll trade you tomorrow. I'll go to another account. You
And
know what
so
I'm saying? But
that right there is the discipline portion right there.
yeah,
Like,
it is, because
yeah.
you like 200, I could get 200 back. Nope, leave it alone.
Or I'm trying to get the 200 back.
Don't do it. Because you're gonna get 125 back. You're like, okay, I'm gonna take another trade. I need 100 more, and now you're down 350.
I have another question though about trend lines because when we mark our charts in the morning, those are the trend lines, the red and the. Let's just use the day chart. When we put the red and the green, is that considered a trend line?
Well, no, that's not a trend. That's just a support and resistance.
Okay.
You know what I'm saying? That's just a support and resistance. Trend lines are like a trend line would be. Hold on, let me see. Your drawing tools.
Because I see a lot of people do it like diagonal.
Yeah, that's a trend line. So like this right here would be like this was the lower low, and you can see it started trending up.
Hmm.
That's a trend line, because once it got up to here, it went below the trend line and then it started going down. See that?
Okay.
See
But
that
how?
doji? A doji created, it went below the trend line and then it started going down after that. It was all downhill. But this is considered a lower low, because it was
Mhm.
going high, higher high, and then it went low. So that was the lowest low of that candle, because it was a red one. So you'll mark that one. It trends, and if it goes below that trend line, which this red one went below the trend line, that signifies a short. That is, the market's going to start going down.
How do
I
you know
don't
where
teach
to
trend
place it?
lines.
Oh, okay.
I don't teach trend lines. I Because support and resistance is easier for a beginner to understand.
Okay. Okay.
You know what I'm saying? Triple threat. The top of that triple threat, the bottom of that triple threat, gaps. You know what I'm saying?
I'm
Those
trying,
I teach
I'm
supply.
trying to, I thought I cut off the microphone.
Larry, what's going on? Yeah, but that's why I teach that, because it's just easier to understand support and resistance for someone that's new. Um, and there's stuff like liquidity
What's going
zones.
on?
You know, that's
I was
another thing
trying,
that
I
people.
thought I cut off the microphone.
So and like John group, John, he teaches liquidity zones.
Hmm.
To be really proficient with liquidity zones, which is an institutional level, you have to have a cushion. You have to have a cushion in your account, because liquidity zone, it could be a whole block. It could be a whole blocked off area, and the market could go down at any point in that area. You know what I'm saying? So if you don't have a nice cushion, you could take a short and it'll tear you up, because you're not built for that kind of trading just yet.
Because with that, you're riding the wave.
Yeah, yeah, that's when
Yeah,
people
yeah.
like, trade the trend is a downtrend, so you don't want to buy in a downtrend, you want to sell it, but you got to be able to find where to sell at.
Okay.
And you see me a lot of times, I'll buy the market. It could be a downtrend. I'll buy the market because support and resistance is still support and resistance. So the market could be going down. I could still buy it at a certain area. I just know if it's a downtrend, if I want to go against the trend, I'm not trying to take a big trade. I'm trying to get 50 to 100 if I'm going to go against the trend. Where a lot of people mess up, they take a trade against the trend thinking they're going to get five, six, $700. Not if you're going against the trend. You're not. You're going to get 50 to 100 and it's going to come back down and knock you out.
That's like trying to go against the ocean.
Yeah, exactly. Or like my old trainer used to say, you're trying to catch a falling knife. Same way on the way up. If it's a big trend on the way up, I'm not trying to sell for a big sell. I might get a little sell here and there, a little 50 here, 100 here, 150 there, and get out the way. You know what I'm saying? But I'm mostly looking for it to pull. If it's a trend on the upside, I'm waiting for it to pull back at a level so I could buy it higher.
Can you show us on
Same
the
thing with a
play?
downtrend.
Okay.
Oh, go ahead.
Can you show us on the playback how you said if you enter at two different points where the profits will be totally different? Can you show us an example of that?
Let me think. Hold on. So here, well, it was a good example right here, but I gotta rewind it. Let me go down to the 1 hour. I mean the 5 minute. Oh, my 5 minute look crazy. let me let me zoom in a little bit more so it don't look like that. Okay, so for example, this is a good example right here. Let me go annotate. Okay, so y'all know this central pivot, right? The good old central pivot right here, right? Instance where we could both buy and sell and we both make money. When the market was coming up, it was going up right here to the central pivot. You could have sold the central pivot. You could have sold the central pivot. You weren't wrong because it went down. It went down here. You could have sold it. I could have also bought the central pivot. Once it closed above the central pivot, I could have bought it right here. It would have went down a little bit. I would have been negative, but ultimately, look how much higher it went up after that. We both took a buy and a sell right here at the central pivot. You got your money on the way down. I stayed in the buy, and I made my money on the way up. But we took a trade at the same spot. So that's what I mean. You're not wrong. You just might not have. It might not go that far down. You were right. It went down here. You sold it when it came back down to it. You sold it. You made some good money, but because it was a trend up, that big old green candle was a trend up. You went a sell against against the grain. You made about that's still about $200, but you got your 200. Get out. It started going up. Now I'm making money, but we both bought and sold the market at the same spot.
But you knew it was going up because it closed above the level. That's what you're
Yeah,
saying?
I knew it was gonna go up, but
Okay.
as I said, I knew it was going to go up because it closed above the central pivot. When it came back down, you could have sold it right here and be like, boom, I made my money on the way down. Okay, now it's going back up. Let me get out that trade. You made 200, I made 200. And you took a buy there and I took a sell. I mean, you took a sell there, I took a buy there. You know what I'm saying? So we could both be right. It's just I could have made more. I would have made more than you because this trend was a very strong movement up. A little hesitation because this is still a strong. Both of these are still strong levels. So I had a little hesitation. You sold it, made money. I'm still in the initial buy because I bought it right here. I'm still in the buy, but I took a little bit of heat and turned around and made me some money. I took more heat, but I made more money at the end of the day. But if you don't have that much of a cushion, that was still a great short. That was a great place to sell the market.
See, that's an
So would that
example of where I would panic because I would think it's going down and I would like lose, even though I know it was going up because, like you said, it closed above the level. So, like, how do you like not panic in that moment?
You got to remember the rules. Like he
The
said, it
rules.
closed above. I'm sorry. I'm not trying to sound
No, you're
condescending or
right.
No,
nothing.
no, no,
It's
no, no.
still a
You're
rule.
fine, Zeke.
It's
I
still
ain't taking time.
Okay,
the
but
market. The thing is, if you know the rules of the market, if you take a trade based on the rules and say you lose money, you can't be mad because you followed the rules. The market don't have to follow nothing. The market don't care about your line or none of that. But we know that central pivot, triple threats, those are all support and demand, support and resistance levels. As long as you follow the rules, the market, 9 times out of 10, or more likely, the market is going to follow those rules also. But you still have to take into account human movements, like the time and sales. That's why I showed y'all time and sales, because even though this was a good area to buy and or sell, somebody in time and sales could have put in 150 contracts. So even though you followed the rules, somebody went and did 150 contracts and made the market drop. You weren't wrong. It's just it's still manipulated in some form or fashion. That's what they call market makers. That's why they call them market makers. You notice when it's closer to a holiday, the market don't move that much. when there's no news. The market is like, I might move, I might not. Because the news is manipulation. Market makers are manipulation. They'll say, hey, look, by the end of the day, we need NASDAQ to go at least 25, 670. So a market maker job is to push the market to a certain point by the closure of that day. They're not going to just put a whole bunch of money in and shoot it straight up because they have to let it balance out throughout the whole day. They just know by the time 4:05 get here, it needs to be above this or below this. It's all manipulation at the end of the day. That's why all our job is to get in there, follow the rules, get a bag, and get out the way. Because there's always something happening that we just don't have any control over.
Would that red candle be the retracement?
Which
That
one?
last
This
red
this
candle?
one right here?
Yeah.
Yeah. Yeah. So the way this is going, since this is a big drop on the way down, I wouldn't have bought it. I wouldn't have bought the central pivot right here. I wouldn't have bought it because that's way too much heat falling, right? So I would have waited for it to see what it did. It closed below it over here. It continued down, and on the way back up, it bounced, made some money.
Zoom user, you got a hot mic.
Got a hot mic. I got you. So, and then let me annotate. And that's the tricky part about the market, right? You see, this was going down pretty strong, right? It was going down. I wouldn't have bought it right here. I wouldn't have bought the market right here at the central pivot because we got 3 strong candles going down. So I would have waited. It closed below it. Okay, cool. It closed below it. I'm looking for a short now. It came down. It went back up. You could have took a short right here. Boom. You were right. You got your short. There was nothing wrong. That was a great trade. You took the trade. You got your short. But while you seen that good short there because it closed below that area, what I was looking at was, hey, even though it came back up pretty strong, look what it did. This one closed above the central pivot. I'm looking for a buy. It came back down to the central pivot. I bought it right here. I took a little bit of heat because I have more cushion in my account. So that little bit of heat don't bother me at all because I know since it closed above it, we gonna get some bread. Look at that. Boom. Went up. Had no problem with that. We were both right. We were both right. We both made money. I might have made more than you because I was willing to take a little bit of heat to get that extra bag. But we were both right. It closed below it over here. As it went down, came back up. You say, I'm taking a short. I'm taking a short either here or here. You were right. It went there, dropped back down. You know what I'm saying? I was just looking at something different. It closed here. I bought it here and went up. We were both right. We both made money. You know what I'm saying? But always look at the closures. The closures tell you a lot of information. You know what I'm saying? Right here, these 2 levels, it closed below them. When it come back up, I'm going to sell it. Boom, it came back up. We sold it. That's a lot of money right there. Believe it or not. That's plenty money. But when you're new to trading, I want y'all to focus on either 50 to 100 per trade or per day until you find your average. Once you find your average, then you set an ATM strategy for whatever your average is. But with that trade, we were both correct. And look, what was that level? That level was 620, 620 down to 606. Let's do the math on that. All right, 620 minus 606. That was 14 points. All right, 14 points. And there's 4 ticks. There's 4 ticks in every point. That's 56 ticks. Each tick is $5. So 56 times 5, that's 200, that's 280 bucks. So because it closed below the level, when it came back up, you took a short, you made $280. That's good money. $280.
Your camera froze.
Huh?
Your camera froze. Everybody's saying it's frozen on my end, and some people said in the chat your camera's frozen.
Oh, I can move that. I can fix it.
Yeah, I wanted to ask the question first. I'm like, maybe it's just me.
But y'all, as long as y'all can still hear me though. But yeah, but that little bit of trade right there, that was 280, right? 280 times 20 days in a month, because it's average 20 days in a month. That's $5,600. That little bit of trade, right? It looked little, but if you would have sold it right there, made 280 and got out, and you just average that on a daily basis, that's 5,600 a month. And you could take that trade and be done for the day, or you could go to another account and wait for another opportunity. When it went down and closed that one, you could have bought it on the way up, because once again, this one closed above it. It closed above it. You were right. Okay, I'm gonna go on another account and I'm gonna buy it now. Whoop, bought it up. You'd have made 280 twice within 15, 20 minutes. You'd have made 280 times two. You ain't got to trade the rest of the day. You did that in 20 minutes. And if you keep trading, that is completely on you. But it don't take long to get, if your goal is one to $200, it don't take long to get there. You know what I'm saying? The hard part is getting there and stopping. But yeah, we both would have been right on that trade. You know, and the more cushion you get, you could have, when that you see that divergence popped up down here. Divergence popped up down here. You could have bought down here if you wanted to. Like, oh, divergence, I'm gonna buy it here and ride the wave all the way up. And if you were in the live Friday, DJ Vito was like 622, buy it. And he was like, hold it the whole day. He literally told us exactly what to do, and that thing kept going up the rest of the day. Now, Vito, he's been trading since the 80s. So he knew what he was looking at. And I took
Also,
and when he
uh,
said that, I took the trade right with it. I was like, you know what? You're right. I'm gonna take that trade. And I did it in micros and just left it alone.
do you also take into consideration the VWAP, that line, that very last line that's curving?
This one down here.
Yes, sir.
Yeah, yeah. So this divergence, it probably was popping up around here on the way on while this was going down. Divergence probably was popping up on the way down, because this line right here, I probably would have took that divergence. And sometimes divergence will keep going. You just got to
Yeah.
have the cushion. If you had the cushion to take that divergence by, it would have eventually turned around and made you way more money. But that comes with building that cushion in your account. That's why that's important. Because I can take that trade and I can take a negative $600-700 and not blink an eye. But as you build that cushion, you'll be able to take bigger trades and make more money. That 50 to 100 that I'm telling you to focus on, that's only because your guys are new and I want you to get a payout. Once you start building that cushion, you'll take bigger trades and sit in the trade a little bit longer to get the bigger reward at the end. And you'll be making $600-700 per trade. But that you got to get that cushion first. So the safer trade would have been a short right here. And then once it came back, what I'm saying? I would have bought the market because it closed above it. I would have bought it. That's a safer move. This is a little more risky, but if you have the cushion, there's nothing wrong with a little bit of risk. Or I would have took it in the eval. I mean, yeah, I would have took it with the eval, and just sat in the trade and see where it went. Because your evals, you guys could use your evals to evaluate what kind of trader you are. You could use it just to evaluate what kind of trader am I. Am I a swing trader? Do I like to hold trades a little bit longer? Do I like to take more riskier trades? And journal those trades that you take. If you take a risky trade and it pays out, write down what that risky trade was. Hey, divergence popped up. It wasn't quite near a level, but I still took it early and waited for it to turn around. You know what I'm saying? Like, journal what you did in the market. That way, when you look back, you can be like, okay, well, every time I took a trade off the divergence and there was no other confirmation, I lost money. Okay, well, for future reference, don't take that divergence trade unless there's a confirmation around. You know what I'm saying? You learn from those, and you can't learn from your trades if you don't write them down, because you're not going to remember every trade that you took for the month. So the ones that play out good, write down what you took and why it played out good. The ones that go bad, write down what you did and why you think it went bad. That way you won't make that same mistake again, or you perfect that mistake that you made. Like, oh, let me load up that day or this weekend and practice that trade to see if I could get a little better next time. Because
Yeah, I'm still having an issue with that writing down.
Hey, don't feel bad. It took me about 6, 7 months to be like, man, let me start writing this stuff down. Because I noticed I was taking the same trade and losing. I'm like, why do I keep taking that trade? I forgot what the trade was. I think I was trading. My old instructor was teaching us a mother bar inside bar trade, and that's why I don't teach it because I was just bad at taking that mother bar inside bar trade. It was a good trade, but I just kept getting my tail whooped every time I took it. And I started journaling and writing down when I took the trade, and I realized I'm just not good at trading that strategy. So I just stopped trading it. And that's how you get better at trading. You need to learn what you're good at. If you're not good at taking the gap bounce, or the fair value gap, if you're not good at fair value gap trades, by journaling, you could look and be like, I lost 8 out of 10 trades. I'm not going to take that trade no more. Or you realize Wednesdays, you just lose money on Wednesdays. For some reason, you're not that good on Wednesdays. So trade micros instead. I don't recommend not trading Wednesdays, but just trade a little more careful or trade micros instead of minis on Wednesdays if you journal and realize Wednesdays are your worst days. You want to strengthen the bad things so that they're no longer a weakness. Or if you just don't want to deal with it no more, like I couldn't trade the mother bar inside bar strategy. So I just got rid of it. I was like, I'm just not gonna do it anymore. I know you hear people call it what's the one that they always call the double tops, double top and double bottoms. I can recognize a double top or a double bottom. I'm just not good at trading it, so I don't teach it. Like this right here, these two, this red and the green one right here, that's considered a double bottom. That would be considered a double bottom. And as you see, a double bottom happened, divergence popped up, buy. You know what I'm saying? But I don't like double bottoms. I don't like taking those trades. So I don't teach them, nor do I take them. But people in the group, they're like, oh, it's a double top. I'm like, I don't care about no double top. I'm like a sore loser, like, I don't care because I'm just not good at taking them. And that's okay. It's okay to not take trades if you're not good at them. Because when I first started learning, I only traded two things. I traded gaps and I traded it was another strategy I used to trade. I don't do it anymore. But it was like a liquidity trade. It's called an FU setup. And if those didn't pop up in the market, I just didn't trade. So it was times where I will go 2 days without taking a trade because a gap didn't pop up or a FU setup didn't pop up. And the FU setup was something from Forex that I learned. And if I didn't see it in the market, I just didn't trade that day. So that builds your discipline. If you don't see your setup, don't trade. And
Sure.
then you'll learn other strategies as you go.
So I got the journal that you recommended, but I don't think I understand how you're saying that you could just write down your trades and then you will see from what you, because it tells you like your entry and stuff like that. I did see
Mhm.
that in the journal, but I'm trying to understand like what you were saying as far as you'll see not to take that trade again. Like how
Yeah,
would you know?
so you can say entry was 620. I took a buy at 620. I exited at 643. But it went all the way up to 655. That's what you write down. And then you write down why you took that. Why did you take that trade at 620? I took the trade. You could put whatever this. Well, this is probably an older level, but you could say I took a bounce off the triple threat. I took a triple threat buy at 620. So now cool. I took a triple threat buy Monday at 620 and it went all the way up to 640. I got out, but it continued up higher. So now, and you'll look at your trades and be like, every time I took a trade off of the triple threat, I made good money and it continued higher. So next time I take that trade, I must try to stay in a little bit longer. I'm gonna stay in the trade a little bit longer and try to get a little bit more money the next time I take that trade because every
Mm.
time I took it last month, it made me money and continued, and I could have made more. So write that down. I took a triple threat buy at 620. It went up to 640 when I got out, and it continued higher before it turned around. And you'll be able to look at that and see every time you took that trade, you made money, except for maybe once or twice. So
That's
that's
good
gonna be
stuff.
your favorite trade. Or you could write down, I took a gap bounce and I made $200 on the gap bounce, but it continued going to 600 before it turned around. So every time you took a bounce off the gap, you made at least 200 bucks. Or you can write down, I took a gap bounce and I lost money. And you'll notice out of 6 times you took a gap bounce, you only won one of them. Guess what? You need to either get better at your gap bounces or just stop taking them. But if you don't write it down, you don't know that. You think, oh, I'm gonna take a trade every time I see a gap bounce. And you're not realizing you're losing more times than you're winning. Stop taking that trade or work on getting better at it. But yeah, you don't know what to work on if you're not journaling what your problems are. Same thing with finding your average. If you're taking trades and you don't know what your average per trade is, you need to focus on 50 to 100 and get out the way because you're trying to make 500, but your average is not 500. So you shouldn't be trying to do that. Not saying you can't get 500, but you need to test out your average. If your average is 500, then that's what you need to focus on getting. I mean, you could take a trade and get 500, but can you do it on a regular basis is the question. Because if you make 1,000 on Monday, but then you lose 200 Tuesday, Wednesday, and Thursday, and Friday, well, what was the point of making 1,000 on Monday? You ended the week with 200 bucks because you kept trying to get $1,000, and that's not your average. You did all that trading and ended the week with 200 bucks because you was trying to get 1,000 every day of the week instead of just getting 200 every day, and you would have been straight chilling by the end of the week. But the only way you know that is by journaling your trades and finding what your average per trade is. This is not a gambling game. If you are a gambler, you can treat trading like gambling and you will never be consistent.
Me.
Can you remind us how to find our average?
Yes, of course. All right. I have an ATM strategy for average. I have a bunch of ATM strategies, so y'all can create as many as y'all need to create. Okay, so to find the average, I set an ATM strategy at 35 or 40 ticks, whatever you're comfortable with. And I put my profit at 0. The goal of this is to take as many trades as you can. 10. I try to keep it at 10 trades. It don't have to be 10 trades in one day, right? You could say you could load up a previous day and practice and take a trade. But the goal is to take an educated trade. Say I'm gonna buy the market, right? You want to buy the market at a good educated area and just sit in the trade and see how far it goes before it turns around and hits your stop loss. And you want to just sit there and see how much. If it goes $600 and comes around and comes back and knock you out, okay, cool. The most it made was 600. Next trade. All right, the next trade made 200. You write down 200. You do that 10 times. You add up all the money you made or all the times it went up. You add them all up and divide them by 10. So if you wrote down every time it made money, okay, it made 600 this trade, 200 that trade, 150 that trade. Add it up, divide it by 10. That's going to get your average per trade. Once you find your average per trade, say your average is 300 bucks, right? All right, my average is $300. So 300 divided by $5 per tick, that is 60 ticks. So every time you take a trade on average, you're going to get at least 60 ticks on average. So you're going to go to that ATM strategy. Where's average at? Average. Go to ATM strategy, average, go to edit, and 60 ticks. So when I take a trade on average, I'm going to get at least $300. I'm going to get at least 60 ticks on average. So you save that. You could keep it as average if you want to. Save. Right? So now you have an ATM strategy of $300. Every time you buy or sell the market, your target is going to be 300 bucks. Because now you know what your average per trade is. That don't mean you're going to get it every single trade, but that's what your average is. And if you want to be a little more precise with it, you can say, you know what? I'm a lower, even though my average is 300 per trade, I'm going to lower it down to 250. Because my average is 300, that means I should have a good chance of getting at least 250, 200. That's why mine is $200 per trade. Because I know my average is actually 380. Last time I checked, it was 380. So instead of trying to get 380 every trade, I was like, let me try to get 200 every trade because that's lower than what my average is. And I'm pretty accurate with doing that. And sometimes you could take a good trade and it continues going. I only do that average on my PA accounts that have a nice little cushion, then I just focus on my average. But when I get a brand new PA, like I passed it, like the one I passed Friday, I'm trading micros until I get it up $500. So it's still a process even with me. When I get anytime I pass a brand new eval, I trade micro. Now I might trade 5 micros. Mrs. M, she uses my 5 micro setup, 5 contract micro setup. But like this one, see, look at that, 135. See how 140 is up 145 is my average. I'm trying to test out my average per trade. It hasn't knocked me out yet. I'm just sitting in the trade to see how high it went before it knocked me out. I know I got in at 52. And I'll just sit in here until it knocks me out, and I write down what's the highest amount it made, and then I'll take another trade until I get 10 trades.
That setup is the truth. I don't care.
But yeah,
That's
this is
five
my
ATM.
micro setup right here. So when you trade micros, I do 5 contracts, and I leave a runner. I leave this runner just chilling. So if it hits all my contracts and it hits all 4, I still have a runner number 5 that's just continue making money in micros. So when I get a brand new PA, I trade this setup on micros because 5 micros is half of a mini. Okay, so instead of $5, you're getting $2.50 every tick instead of $5 every tick. So it's still good money. And I will trade this on a brand new account until I bring it up to $500 profit. Once I get $500 profit in that brand new PA, then I go to minis. And I try to get $50 to $100 on minis until I get a payout.
5 contracts?
And yeah, 5 contracts and micros.
Okay.
5 contracts and micros is $2.50 per tick. And I have it staggered. So it's 20 ticks, 30, 40, 50. So and I'll show you what that looks like as well.
You can actually set up each contract to stop at a certain area.
Yeah. Oh, yeah.
Damn.
Oh, yeah.
That's lit. I'm gonna have to call you on the side.
Well, it's in the Discord as well.
Are you talking about like the trailing stop?
Well, not just the trailing stop, but you can set your profit target at different spots.
Oh, okay.
I'll show you. Where's it at? ATM setup.
Yeah, that's when I be doing in Beast group.
Yeah.
Like cha-ching, cha-ching. See, I ain't got the little sound effects, you know, how you be like
If he's stuttering. So yeah, I have it right here. I have the ATM strategies right here. And each step 1, step 2, step 3, step 4. And that's so right here is just 60. I normally don't have a profit target. I just let it trail. So each one trails at a different, or you can actually have a profit target to stop at a certain point also. You can adjust it as you want. So after you set this up, this is an 8 contract, but you could do it at 5. You could just do order quantity 5 and just do 1, 2, 1, 1, 1, 1, and have a 5th target as 1. But this is the 8 one. This 8 that I have set up. But you can set it up right here, and then the very next slide is the trail setup, which is this area right here. So stop strategy 1 is right here. Click on stop strategy 10, 50, frequency 1. Stop strategy 2, 18, 55 and 1. Stop strategy 3, 20, 70 and 1. And just play around with it like that. And this one right here, this is if you want to do 2 of them. But yeah, I can show you how to do the 5, but I have them all right here. This is the 5 one, right? This is one of the 5 setups that I have. See how I have take profit at different points, and I have different stop strategies. And then as you go down, it'll show each stop strategy. I have it set up right there. So, but yeah, it's different ways that you could play around with the ATM strategies. But dang, look at that 550. Well, so see now being at that average, when it come back down, if it ever does come back down and knock me out, sometime it might not come back. But y'all see how it's bouncing off that right there? That VWAP is bouncing down off that VWAP, even though it's a strong move up. But this is also the day that Vito told us to buy it down here and leave it alone. So but yeah, you could have took a nice little short right off of that as well. But yeah, that's what my average ATM strategy does. You just want to find your average. You just want to sit in the trade until it come back down and knock you out if it ever does come back down. And you just write down what's the most you made before it knocked you out. But sometimes you can just take a good trade and it just keep going up.
Order filled.
Yeah, fill that order. But this ATM strategy right here, mind you, I would do this in micros, not minis.
Order submitted.
So I just want you to see what it looks like. If it should get up there.
Order
All right, so
filled.
that's what it looks like. I have different levels right here. And if it goes down, it'll take you out of the trade each one of those it hits. It might not go down. I just want y'all to see how it looks. So let's actually do the trade right here so you can see what the 5 strategy looks like.
Order submitted.
Good morning. And what's the purpose of that? Basically, just so you make money no matter what.
Well, the purpose of that is when you're trading micros. That's I wouldn't use this on minis because that's 5 contracts on minis is a lot. But if you use it on micros, 5 contracts is $2.50 per tick. Because that way you can still make good money in micros without risking as much as one mini.
Gotcha.
So I use this ATM strategy on micros.
Order filled.
Which is where I should be, or most of us should be.
Yeah, you should definitely be on micros. Yep. And I wanted to go down so you can see how it moves. Don't normally move this up. I just want y'all to see when it goes down what it does. And right here, when you have the contracts separated like this, they each knock you out at a different point of time.
$66 last week, down from September's record by 50,000.
Right. That's why I was asking, what's the point of that, though?
So you can lock in money. So you can lock in your
Okay.
money
Gotcha.
and not instead of waiting for it to come all the way down here. And then what if it never gets down here?
Right.
And
I
it turns
gotcha.
around and then you lose money. At least this way you locking in something on the way down.
Because sometimes
And
I just think it's gonna, hey, that's good money. I just hit close.
yeah,
So
you can
instead
do
of
that
doing
too.
that, I should do this.
Well, I want you to also get used to sitting in the trade and trusting your trades. Because remember, the last one is a runner. There's no target on the last one. I have a runner. So if this starts going down, it's gonna knock out these 4. I made money, but then I have a 5th one that doesn't have a target. So if the market keep going down, I'm snatching up all the loot. See here now it's going down now. And as it goes down, it should be locking in the contracts. And I like having a runner because if you choose a good direction and is continue going, that runner is going to get whatever money is left over. And I have a trailing stop to where it automatically moves down for me. So I don't have to keep moving the stuff down. We got 1 minute on this candle. I mean, if it ever goes down, it was up 200, but I want y'all to see what it does when it hits the contracts. Let's speed it up a little bit more.
It's going straight up.
Yeah, because Friday it was an uptrend. It went down a little bit, but I wanted y'all to see it hit the contracts so you can see how the runner follows it.
This is good for people who just want to do like that 100, 150 and get out and stay out.
Yeah, you could definitely do that. All right, let's see. I think this candle did go down. I mean, that's the all-time, that's the overnight high, so it should bounce off of that.
Okay, but it closed above that level. So does that rule still apply?
Yeah, it's gonna
Okay.
eventually bounce. See it bouncing off of it already. You could have made your money already on the way up. So I wanted y'all to see that. That's what I wanted y'all to see. How it goes down and hits each one. See now, see how the runner jumped in? You see how the runner jumped in there and it locked in all of it because my stop loss moved into profit. So after it hit that fourth one, the stop loss automatically moved into profit. And now you're out of the trade. Let me remove this so you can see. Reset. That way, let me rewind it for you. No.
Hey, whenever you get some time, maybe before Monday, if you can get back and look at my charts again, they got all screwed up.
Yeah, I can look at them.
And then I was going through lesson 13 and lesson 16. So your daily, what you do in the daily,
Yeah.
and it's all screwed up because I got
Okay.
to the daily chart, but then you said go to the 4 hour chart, but I don't have anything that says 240.
Okay, you don't have a 240 chart. Okay.
Yeah, so I couldn't finish my lesson
Okay.
basically.
Yeah, I can help you with that. Also, I wanted to show y'all this right here. Now you see how it's above the market? This is a sell stop. So this is what a sell stop does. Because you remember, I want to sell the market so you can see how it hit all the levels. So instead of waiting for it to go down there, I'm going to put in a buy stop. I mean a sell stop, not a buy stop. No, yeah, it is. It's a sell stop because I'm selling it.
You may be able to pay as little as $2 per dose. Ask your doctor if Intivio, including the Intivio pen, is right for you. Order filled.
See that? So you see how the sell stop, it hit it, and then it went into a sell. It went to a sell. So instead of waiting for it to go below and then selling it, I put in a sell stop. So when it hit that, it put me into a sell instead of a buy. Y'all see how that worked? So if the market is above you, you right click and instead of hitting buy market, you hit sell stop because you want to sell the market. So when it came down and touched that sell market, it put me in a short. And I'll let it play out so you can see. But it put me in a short now to make money on the way down.
Where do you right click at?
Anywhere on the chart. Well, anywhere you want to put the trade at. It could be down here, and it'll put the sell stop down there, down farther.
Okay.
So wherever you want to put the sell stop or buy, you could put a buy limit or a sell stop wherever you click that button at. That's where it would place it. But you can also move it. So if you put a buy stop here, you can move this. You can move it around where you actually want it at.
Order canceled.
Let's fast forward because it was the next candle that did it anyway. We got a minute left. See, and this is one of those situations where if you have cushion in your account, you don't mind because it's going to go your direction anyway. But yeah, once it closed, look, once it closed there, you could have bought the market right here too. Once it closed there, it closed right here. You could have bought it and you could have made a quick $200. So closing above that level still worked. But because the overnight high is a strong level, I knew it was going to bounce down a little bit too before it continued up. But yeah, that closure above it, you still could have bought, made your money, plenty money. All right, and watch how this runner popped in. So it popped in, it got that one. It's gonna get the other contracts, and then you'll see the stop loss jump down into profit. So it's the runner. We still have two contracts. See that? It moved up so that you could lock in the money and you don't lose what you just made.
Ooh, $800 something.
Yeah, and now that's 879. So if you would have took that trade in micros, it would have been $87 in micros. It was $87 and like 87.90, so $88. And trust me, $88 in micros is good money. It's just in minis, that's 879.
Yeah, it's just not as good as 879.
Yeah, it's not good. But you notice
And
that
that's
went
where the
negative.
gambler comes out.
But you notice it went negative 1,000 before it did that.
Right.
So if we was in micros, it would have went negative what, $100 before it turned around and made us 80 something. I don't mind having negative 80, $100 in micros. That's not gonna make me mad. You know what I'm saying?
And
So
you can always change the contracts because on micros you can go up to what 8 contracts, right? From
you could go up to eight
well for 25K is about eight
eight
contracts.
micros. I think it's more than
Yeah,
that, isn't it?
it's more than that.
Yeah, because if you could do three minis, if you could do three minis, 10 micros is one mini, so 30.
Oh
You could do up to
shoot.
30 micros.
Yeah. Okay.
That's three minis.
Yeah.
I
So
ain't
you
gonna lie, my ego be not wanting me to trade the micros, but now I see, and I'm gonna listen to you and just trade them.
Same.
just up the contracts. That's all.
Yeah,
Just
I've
up.
been doing micros for about 2.5 weeks. I'm like, shit, I could just do NQ now. I blew through three accounts last night in 2 hours.
But see, the value, you have to understand the value of micros is I'd rather get $87. I still risk $100 to get 87, but in a mini, if I would have took that same 5 contracts in a mini, I was risking 1,000 to make 800.
All right.
You know what I'm saying? So with micros, it's not about how much money you make. It's just being consistent and being able to sit in a trade a little bit longer.
What about the
And on it,
commission fees?
That's
and
how
on
you
an
that's how
eval
you get your
account,
patience.
they don't want you to make that much in the beginning anyway.
Yeah, they don't want you make yeah.
Like 500
I,
average.
I don't want to call nobody out, but if you
You could
if
do
you
it.
if you use certain ATM strategies, you're gonna tear that consistency rule up. That's why
You
I
can
want
call
y'all to
me
be
out. It's
consistent.
okay.
That's why I want y'all to be consistent because if you use a certain ATM strategy, you're gonna tear that consistency up.
I caught that, Miss Age.
You could
Don't,
call me out by 81% that I went
don't
up.
feel bad. You ain't the only one, Barbara.
I'm still on Beast ATM, so you might have to help me with that too.
Yeah, them ATM strategy, man. ATM strategy, depending on which one you pick, can make you a lot of money. You know, and if you are on a brand new PA, you have a 30-40% consistency rule you have to follow. So if you're over here using my 5 contracts or my ATM strategy that don't have a target on it, you're gonna tear that consistency up. Because I built them ATM strategy because I want to make money, not because I want to be limited. So I
And they're
only
not gonna
use
and
those.
they're not gonna pay you out once you
Yeah,
break that
they're
rule.
not gonna pay you out. So I only use those on accounts that I don't have to worry about consistency anymore. Because I'm telling you, you're gonna make way more money than you ever made in your life if you just focus and do what you're supposed to do first. It's gonna seem slow, but it's still faster money than most things you're gonna do anyway.
So let me
But
ask you this: like you, Cappy, Beast, all them guys, you guys still use prop firms. I mean, I know it's somebody else's money, whatever. But
Mhm.
sometimes you guys have all these issues. Like he had issues with Apex and Take Profit, whatever. Why don't you guys just aren't doing cash accounts now that you're so established?
Oh, I have a cash account.
Yeah.
Yeah, I have a
Okay.
cash
Why do you still trade prop firms then?
because it's free money.
Right. Okay.
I have 24 accounts, so I can make $100. I can make $50 each. That's 50 times 24. My
Got it.
cash account, I only do $50 to $60 a day on my cash account. I just want my cash account to outperform my Roth IRA.
Okay.
Because with a cash account, I can take that money out at any given Sunday. Anytime I want, I can take that. I don't have to wait for a withdrawal. Or I can just take it out whenever. So my goal with my cash account is just to just let it keep building because I don't need it. So I just build up every day. You know what I'm saying? I put 10K in there. I just let it build up. And then once it gets to like 40, 50K, I can be like, all right, let me get 20,000 out, put a down payment on this or buy that or buy. I'm going to land auctions now. You know what I'm saying? I want to be able to go to a land auction and be like, how much is that land? Oh, okay. 20,000. Give me that
Got it.
land. But yeah,
For the commission fees for micros, though, like, don't they take out more or something like that? The more
yeah, if you
contracts.
take a bunch of trades.
Well, then how many trades are you supposed to take?
That's why you just take one trade and chill. Just take one good trade and just like look. If I would have chilled in this trade, look how far it went down.
But if I take one trade with 5 contracts, how much is that in NQ?
One trade with is
What's
five
your
times five.
target?
No, I meant micro. Sorry.
Oh, it's $2.50 per tick
Okay.
if you do 5 contracts in micros.
Okay. That's what.
But
Thank you.
the purpose of micros is to get you comfortable with taking a trade and just sitting there. Stop trying to get out. So the reason why we get out so fast in minis is because we got our profit, get your money, get out. But in micros, you can sit in the trade a little bit longer. Look how far it's going down. Look, we had divergence pop up. Divergence said, "Hey, short." The overnight high said short. If we would have took this trade with 5 micros and just left it alone, look how much money you would have made. Because I want you to get used to sitting in the trade. Because then once you get used to sitting in the trade and you do that same trade in minis, you could have passed the eval. And I know you guys took plenty trades in minis and got out at 200 and you were like, dang, that thing went all the way up to $2,000 because you're not used to sitting in the trade a little bit longer and trusting your education. Or you don't know, you didn't take the time to find your average per trade. That's why you're getting out at $100 because you don't know your average. Your average, after you learn and practice, your average might be $600 per trade. And you shorten yourself because all you're doing is 100 per trade because I told you. But you never tried your average. Your average might be way higher than $100, but you don't know that because you never tried it.
Is that in your course?
Yeah, the average. Well, I'll tell you how to find your average in here. I don't know if I put it in the course because I haven't watched the videos in so long.
Okay.
But I could add it in there. That's no problem. But to find your average, right here, you get your average ATM strategy. You put it to 0. Stop loss, whatever you want your stop loss to be, put it at a decent stop loss. Don't put nothing crazy. And what you're gonna do is you're just gonna take educated trades. You're gonna take educated trade. You're gonna in simulation. You're gonna take 10 trades. Every time you take a trade, make sure you take it at a good level that you practice, that you learned, and just sit back and see how much money you make. Because your target is 0. So you just want to take the trade and stay in the trade until it knocks you out at -35 stop loss, -40 stop loss. And you
Okay.
write down, my first trade made $300 before it knocked me out. My second trade made 1,000 before it knocked me out. You want to do that 10 times. Add them all up and divide it by 10. That's your average per trade.
You do that micros or minis?
Either one. Either one. You can do them, but because you're counting, you're really looking at the ticks. How many ticks do you make on average? So it
Okay.
don't matter if it's micros or minis. If your average is 50 ticks, it could be 50 ticks of micros, 50 ticks of minis, still 50 ticks. But write down, okay, on average, I get 45 ticks on average before it knocks me out at -35. So you can keep that -35 as a stop loss, and now you know what your average per trade is. So it don't matter if it's minis or micros, it's still a tick. That's how you find your average. I just tell you $50 to $100 per trade because you don't know your average yet. Once you find it, then you need to try to get close to your average every time you trade.
Okay, Mr. H.
Hmm?
Yeah, I had just joined Take Profit Trader, and I was trying to see. I made 585 with you Friday,
Hmm?
but I'm trying to see because they got a consistency rule for the eval. So what would I have to make to pass the eval so I can stay where I need to be at?
What size take profit account do you have?
50K. I paid like 120 with your code for the 50K.
Well, they're normally the same. To pass a 50K is normally 3,000 to pass. It should be the same on take profit as well.
Yeah, I
I
just
got
made
two take I got two
585,
take
but they
profit
said
accounts. I haven't even
like 5
tried it
days
yet.
straight.
Say that again.
Like I made 585, but they say I have to make like like you have to have 5 consistent days
Hmm.
of like I don't know how the percentage goes. Like
Yes.
what I
So take profit. You can only make. I think they have a 50% consistency rule on your eval. They're the only one that have a consistency rule on the eval that I know of.
right.
So with them, if you have a 50K account, I think it's 50% of the withdrawal, which is I want to say it's 2,500 for a 50K account. So it's 50% of you're nowhere near that. Don't worry about it. If you average $500 a day, you're far below the 50%. So I think your first payout is 2,500. So times that by point 0.5 is 1,250.
50.
So 1,250. And that's if it's $2,000 withdrawal, then is 1,000. So if you're doing
I mean,
500 a day, you're fine.
so I can make $500 a day on email.
Yeah, so you can only make so much a day, and you have to. I think with take profit, you have to trade 10 days, is it, or 8 days?
5 days.
5 days. So yeah, so if and that's weird because if you can only if you have to trade at least 5 days. So if you do $500 a day, you know you should have it passed within that same month if you can do five a day.
Okay.
Because you got to make three. I'm pretty sure you still have to make 3,000 to pass a 50K account.
Yeah. And I
Wow, I
have
didn't know that. That's crazy. So he can make five. But he can't lose how much? He can't lose what? He can't lose the five each day.
You
Like he
can't
can't.
lose more. I think you still can't lose more than 50% of the total withdrawal. So you can't have a day where you
1250 or
lost.
something like that.
Yeah, you can't lose 1,250 and then the next day make 1,000. You're like, hey, consistent. You got to be consistent.
Man, we
It's
trying to
somewhere around there
YOLO.
because that's how it
We
blew
trying to
right
YOLO
down.
these accounts. We need Apex. I'm
Yeah,
trying to
but that's
YOLO.
why but once again, that's why I tell y'all to find your average, have a max amount you're willing to lose and a max amount you're willing to make. That way, no matter what prop firm you're using, you're always within that law. You know what I'm saying? Because if it's 50%, 40%, 30%, it don't matter to me because I'm only trying to get $200 per trade anyway. And I try not to lose no more than 300. So I'm always within a consistency rule.
my next question is, okay, with the stop loss, I had a Bullonox account too,
Mhm.
and when I put the stop loss there in the morning time in the New York session, I'll make a decent trade, but you know how it stops me out before it goes back my way. How do I avoid that?
You just got to work on your entry. You probably is when you enter the market. It went against you first before it turned around. So you weren't wrong. You were just early. You can adjust your stop loss, but you don't want to get used to, having a huge stop loss. You got a $600 stop loss. Like, what are you doing?
And make sure that one thing's on current or ticks, not currency,
Yeah. That too.
because that's how my shit was blown up at first.
So you had it on currency.
Yep.
Yeah. The only thing I put on currency is the P&L, so I can see how much it's making. But the actual ATM strategy is in ticks.
Show him on that because he might be doing the same thing I did.
No, we have it on ticks.
Yeah,
Okay.
ticks, right? Okay, you got it on ticks. Okay, yeah. Just make sure it's on ticks, because that way, whether you're in micros or minis, you're getting 50 ticks a trade. It don't matter where you're at. Because if you base this off of money, you're not gonna make the same money in micros that you make in minis, but you get the same. The ticks are the same. So if you can average 20 ticks per trade, then focus on 20 ticks per trade. But that's why I want y'all to have an average, because as long as you stay within your average, you're never going to break that consistency rule, no matter what prop firm it is. But the cool thing about Take Profit Trader, once you pass Take Profit Trader, you don't have to worry about no consistency rule anymore, and you don't have an activation fee either.
Right, so I just got to keep making $500 a day.
Yeah, if you can average five a day, yeah, just average five a day. But there's no rush. There's no rush. If it take you a whole month, it just take you a whole month. If it take you 2 months, it take you 2 months. I don't want you to feel like you have to hurry up and pass it. I got to hurry up and get this done. You don't. You can take your time.
I can make $200 a day still, with even though I make the 585.
Yes, you can still make 200 a day, 200 a day, and be just fine.
Yeah, that's why I was confused on that. Like,
Yeah, consistency just means you can't make above that 50%. You can't be making 12, 13, $1,400 a day. They not going to approve you. They're not gonna let you pass because you broke a rule. And that's what happens when you borrow money. You're borrowing money from somebody. You got to follow their rules. It's just they're not gonna break your legs if you don't follow the rules. They're just not gonna pay you.
So I asked Chat GPT about, prop firms and things like that. And they said obviously they're 70% of the people aren't going to pass it
Yeah.
type of thing. But what is one of the better ones, in your opinion, I guess? What's the best prop firm to use?
It depends on your skill set. If you're a more experienced trader, take profit trader hands down takes the cake. Because the reason why I don't recommend it for a beginner is because you're paying more money up front per month for that eval.
Right.
But once you pass it, there's no activation fee and
Yeah,
there's no consistency rule. And you can withdraw money multiple times a day.
that's what you mean.
So if you're a big dog trader, beach trader, he can make 1,000 a day with that account and take out 1,000 a day. You know what I'm saying? But if you're newer and you're still trying to, if you can't pass an eval in a month, I think Bullinox and Apex are a better option because you're paying less up front. You're not paying $90 to $100 a month. You're paying $20, $30 a month.
Because that Bolonax has that discount right, that 91 discount right now.
Yeah. Yep.
So I bought a bunch of those.
Yep. And then Lilu, you could buy bundle. Lilu have bundle deals that you can buy at 85, 90% off. So they'll give you 5 evals for the price of one, and you just have to pass one of the 5.
Yeah, I got to get with you on that because I looked up Lilu, but I didn't know what I should get when you first mentioned it.
Yeah, and that's the problem. They have so many different options. I'm like, why do y'all have so many different type of accounts?
Right.
But I just like the bundles. I order either straight to funded when they have a deal, a sale on the straight to funded, and I get the bundle, the 50K bundle account. Because you could throw a Hail Mary on 2 of them and then take your time with the last 3 and try to pass one of the 5. You might throw a Hail Mary and pass it. Like, cool, that's done.
But it's not a consistency thing?
No, they don't have a consistency for the eval. They have a
Okay.
consistency for the PA.
Okay.
Theirs is 40%, I think, 30 or 40. But you shouldn't be trying to make that much anyway. You should be $200-$300. You good.
Okay.
But yeah, each prop firm, they just have different quirks to them. But I think if you can pass in a month, I think Take Profit Trader is one of the better ones because it's $90. You pay 90 for that first month. You passed. You don't have to pay an activation fee of 140 something dollars, and then you can make as much money as you want because you can get payouts every day or daily. But if you're newer, I like Bullinox, Apex, Lilu because they're going to be cheaper up front, and you just have to pay an activation fee when you pass a 119, 145. Right now, Apex is doing $6. That one I passed Friday, I paid $6 to activate it.
Okay.
So they all just have little small things that make them different. But at the end of the day, if you just make 300-400, get your average per trade, you don't have to worry about a consistency rule because you're going to fall within that consistency anyway. And the reason why 70% of people fail is because over 70% of people are self-taught. They have bad habits. They like to add contracts when they're in a losing trade. That's called what is it? Slide? It's the slide. I forgot what they call it, but that's illegal. You're not going to get a payout if you do that. If you trade the certain red folders, you're not going to get a payout. You know, if you buy and sell the same market, if you buy and sell in queue, that's called hedging the market in the same trade. So that's why a lot of people hate prop firms or talk bad about prop firms is because they don't know the rules because they're self-taught. They think, oh, adding contracts in a loss, hey, I got it out of the hole. Yeah, but you can't add contracts in a losing trade. You know what I'm saying? And you fail and be like, oh, prop firms suck. Yeah, that's because you don't follow the rules because you don't know them.
Right.
You're teaching yourself something you don't know. You know,
All
but
right.
that's why
I
so
think if
many
I get my
people fail.
charts back to good to go and I'll have to finish my courses with you, I think I'll do all right.
Yeah,
And
yeah. Just
quit being freaking greedy and gambling.
yeah, stop gambling. Yeah, because gambling ain't gonna work
I've always
in
been a
trading.
risk taker.
And it's okay to be a risk taker, but you got to take more calculated risks.
Right.
That's all. It's just calculated risk because you're not going to get ahead if you're not taking some kind of risk. Y'all all are taking a risk. You know, you say, hey, I'm gonna buy this course. I'm gonna learn this strategy. I'm gonna learn this. Even though they say 90% of traders fail, what they don't tell you is over 70% of traders are self-taught. So of course, your 90% are going to fail if most of them taught themselves. They don't tell you that part. They just try to scare you. Oh, 90% fail. Yeah, but that's because they're self-taught. You know, but if you can control your emotions, stop gambling, take educated trades, get your money and get out the way. Follow the rules, you'll be fine. Because once you start getting them payouts and you got a little cushion, they come quite frequently.
$500 a day should not be a problem.
Five
$100 per contract or per, you know.
And $500 a day is 120,000 a year.
I know.
That's, and if you could do that with more than one account, come on now. The possibilities are endless, but you have to first beat that urge to take crazy trades. You know what I'm saying? Take trades, educated trades. Just because it's moving down, that don't mean you sell the market because it's moving down. Why did you sell it? Like right here, why
Because
did you
it's
sell
moving
this?
fast.
Yeah, exactly. But like, if you would have just waited, okay, it's moving up. You would have been like, oh, I'm gonna buy it because it's moving up. And look, it turned around on you and kicked your butt. But if you would have just waited for it to get to this yellow line, because that's a 1 hour triple threat, look what it did. It went above it a little bit and then it went down. Because I waited for it to get to my level and I took the trade. Instead of just jumping in the way up, oh, it's going up. Let me buy. Okay, it turned around and smacked you.
Right.
Because you didn't trade based off of a reason. You just jumped in there. And before I take a trade, I always ask myself, why am I taking this trade? So I mark up my levels. I don't take a trade unless it's at some kind of level. Ooh, y'all heard that? That means somebody took a big old trade. And you always have to take into account something crazy that's happening. That's why I have time and sales as an alert.
Is that a free indicator that time and
Yeah,
sells?
yeah,
Okay.
yep, yep. Time and sales lets you know when something pop off. Look at that. 67 contracts short. And it's going to continue down. It tells you exactly where 82.75, 82.75 right here. He put in a short at 8275.
What was my other
I'm
question?
saying those are market makers. Those are hedge funds and stuff like that, putting in them big contracts because they have the power to make the market go in a certain direction.
My
Yeah,
other
they
question
trading like
was,
what, like 1,000 contracts or something?
67.
Oh, well, on this case, but yeah.
Yeah. But oh yeah, they trade big. You'll see 130, 280.
Colors mean on that?
You know what I'm saying? They trust me, they take big risks. And you gotta say 67 times
It's,
5. That's $335 every time, every tick.
what does those colors mean on that screen?
They all mean so they all mean something slightly different. Like some of them might be trades that they took to get out of a trade. The only ones I pay attention to are the orange and the green. Because the orange and the green, orange is a sell, green is a buy.
Okay, okay. I was
These other ones,
confused
they
on
mean
that.
slightly different. Above ask foreground, ask foreground. The one at ask foreground is a buy. At bid foreground is a sell.
So
Bid
only
and
pay attention to the orange and green.
yep, bid and ask.
All right.
You know what I'm saying? At bid is a sell. At ask is a buy.
Okay.
And the other ones are just foreground. You could Google above ask foreground, like what that mean. But I mostly just focus on those two colors anyway. And you'll see that's why you see them most. You see green, orange. And you'll notice when them big ones drop in, you'll see how the market moves towards it. That big B popped in, it went down a little bit, then it came back up. He got his money, got out. And at $330 per tick, it ain't got to move a lot. And also, these guys that take these big trades, they're probably sitting that trade for a while. And you'll see it'd be way down here somewhere. Look at that. Look, it's going up. Look, they pushing it down. 807. He got in right here at 807. Look at it. He took a short at 807. 807 short all the way down to here at 74 contracts per tick. He made about 30,000. Look at that craziness. From 807 is at 782. And old boy that did those 67 contracts, he got in at 82. And look where he's at now at 769. Them boys making hundreds of thousands. And when I see big trades like that, I would have just sold the market. I would have sold the market and just sat in the trade. Or if you're say you're already in a sale, right? Say you're in a sale and you see those big contracts pop in, I'm staying in that sale. I'm gonna hang around a little bit longer. Or if you're in a buy and you see them big contracts jump in there, get out. Get out. You buy in the market and you see a 67 and a 74 jump in there, get out. Take whatever little money you got or whatever little loss you already took. Take it on the chin and go ahead about your business.
And that chart's on your control panel?
Yeah, yep, right here. And that's why when I trade, I have this up at all times. That's why I have multiple screens because I have time and sales in my control center on this screen, and then I have charts on all my other screens taking trades with all my multiple accounts. And I'll have this up because if I'm buying the market and I see them a whole bunch of short sales come in, I'm gonna get out of that buy. I'm like, you know what? Let me close out and I'm probably in profit. I'm probably up $300-400. I'm like, let me go ahead and get out because they putting in a bunch of sales and I don't want to get smacked.
On time and sales, um, tell me how you use that alert, how you get that alert.
Oh, right click, go to properties. It's right here. Block alerts. Block alert size. I have it at anything 60 or more. Block alert sound. Just click that right there and it'll let you pick the sound.
Okay.
Yeah, so every time somebody put in 60 or more contracts, I get a little buzz sound. And if it's a big contract, I just sell. I don't if I would have seen that 74 go in, I would have just sold right along with them. And look, I would have made my money and got the hell on. Now it's
Okay.
going back up. Because you see all those green that went in after that 74, he made his money, then a bunch of green went in because they bought it back up. They pushed it all back up. So if I would have seen that 74 go in, I would have took a short right along with them, made my 200-300 and got out. Because as I said, the market moves for a reason. You just don't always know what that reason is. But when you have time and sales up, when you see that big drop, you're like, man, why it drop? Oh, somebody put in 74 contracts. That's why. Why is it going back up? Because you see all these greens, 6, 8, 9, 6, 12, 10. They pushed it back up little by little. That wasn't necessarily a level that did that. That was people that pushed that up.
Mm.
But it's a reason for every move in the market. You know what I'm saying? But that's how I use time and sales. If I'm already in a buy and I see a bunch of orange pop in, I'm gonna get out of that buy. I'm gonna take my money, tuck tail, and run. Like, all right, cool. I'm gonna wait for another opportunity. Or if I'm selling the market and I see a whole bunch of orange pop in, I'm gonna stay in that sale because they helping me push it down.
That time and sale almost works like divergence.
Yeah. And that's the same. Like when I'm trading, I look at a lot of different things. And as you practice, you'll start doing the same thing. Like I don't take a trade off of just one reason. Like if I see a reason, I'm looking at 5 other things that's happening around the same time. So look at 86 buy. And they did that at 80. Now they bought it at 807.
A lot of people don't know about the time and sales because I know on TikTok sometimes when I do see other traders like in their lives and when I might mention something about about the TNS, they be like, "Well, what's that?" I'm like, "Oh, okay."
Nobody in Beast Trader Group knew. Nobody in Beast Trader Group, when I told them about the time and sales, they was like, "Oh, you hold it back on us." I was like, "Y'all didn't know." I thought they all knew about it already.
Gang, boy.
Them dudes been trading way longer than I have.
Yeah, we've paid for plenty of trainings and nobody has ever mentioned that.
Damn, we got that sauce over here, cuz.
Money.
Look at it going up from 807. From 807 to 14. 86 contracts. Whoever did that made money. Stupid money. Yeah, so
I'm
if
gonna
I'm
say the
already in the
best
buy,
I'm gonna say the best indicator, though, hands down, is that divergence.
it really is.
Because there's been times I turned on my PC and it'll pop up and make that alert. It's like, all right, well, I'm gonna just take it and make my little bit of money.
Yeah. Hey, I'll be in the living room. When I hear the alert, I'll run in here and be like, sell. And go. Instead of sitting here waiting for an opportunity, I go about my business. I hear that little buzzer go off, I'll run right back in here.
Oh yeah.
Sell. And I do the same thing with time and sales. If I hear any one of these buzzers go off, I'll run in here and be like, oh, it's a buy? All right, buy it.
I'm
Cool. Maybe 50,
excited
50 to
watching your
100.
lives, listening for that time and sales to go off. I was like, man, where is it? I need to find that one.
Yeah, look. 86 contracts at 807. If you would have bought 807 with him, look where it's at. from 807 from right here 807 all the way up to 833. Crazy. Because 87 contracts is going to move the market. That ain't no regular person. That ain't one of us we ain't doing no 86 contracts on nothing. But yeah, that's why I like time and sales. I like to have it open because it helps me stay in trades or get out of trades. You know what I'm saying? So yeah, y'all use that up. You know what I'm saying? Don't be telling people too much about it.
What you say, secret society, and all we ask is trust?
Secret society. Because then y'all see when I be live, y'all hear that little buzzer go off. Like, look, hey, money. I don't be sharing it too much. I might mention it here and there, but I don't teach people how to use it on TikTok. I just tell them what it is. But yeah, that's how I use it. If I'm already in a trade, I'll watch time and sales to know when to get out.
That
If I'm in that,
diversion popped up and pushed it down.
yeah. Oh, yeah, that divergence was like, look, I don't care how many contracts you do. It's divergence, baby. We going down. So you could have bought it at 807, and when you seen divergence, you could have sold it back down to 807. You know what I'm saying? People, it's money. The money, once you start understanding what you're looking at, it's just like buy, sell, buy, sell, buy. All right, cool. I made 2,000 a day. I'm gonna go golfing. And see, if you would have took that divergence short and you see all these orange going in, I'm gonna sit in the trade a little bit longer. Because these orange are pushing it further down. But yeah, but once you start getting more accounts and you start knowing what to look for, hearing the buzzers going off, man, look, when I'm not trading live, you can ask Mrs. M. When I'm in Beast Trader group, I don't be saying nothing. I be quiet.
Definitely quiet. I'd be like, is he still here? I'd be looking like, okay, I see.
Because at that time I have all my charts open. I put 2 to 3 charts on each one of my screens, and I'm trading, you know, 10, 15 accounts at a time. So all you hear is yeah, okay. You know what I'm saying? I'm focused. I'm hyper focused at that time. But it's fun. It's fun. You get money, you lose money. As long as you make more than you lose, you're gonna get a payout. And once y'all start getting
Listen,
that payout, it gets nice.
listen. I know yesterday afternoon the market was closed on the Asian section. I was like, man, I'm ready to trade. Like I'm ready to go. So I had to pull up a little simulation and run it back
Just to get your fix.
just to get my fix. Yeah,
Y'all got
this
some
is
more of them
fun.
contracts, cuz.
Yeah, I don't like Saturdays. The only reason I like Saturdays is because because we have the student session. But other than that, I be really getting mad. Like, man, why can't we trade?
Man, look, I get it. Holidays, I'm like, what holiday is this? Is the market open?
Hmm.
Can at least bust one move. But y'all, it's the Christmas rally. So they're gonna it's gonna be moving and grooving. The week of like right around the week of Christmas is molasses. I don't even trade that week. And it'd be like that even after the week after Christmas. It'd be a little bit of volume in there, but the most of the big dogs are vacation until after the new year. You know what I'm saying?
Did you also know about the lunar cycles in the market?
Oh no.
Okay, never mind that. I'm gonna hold
No,
that
no, what is it?
information.
No, let us
Uh,
know what it is.
So I saw a video on this and tested my theory on TradingView. They have a lunar cycle indicator, and whenever you base that off of the time where it's a full moon, the market is at its highest, and then when the moon is pretty much gone or there's no moon, that's when the market's at its lowest.
Oh,
So I
really?
think it's like every 28 days, and it's a
Oh,
whole indicator on that.
dang. I'll tell you, the more you know, the better you'll get at trading. You know, so that's just all part of the situation. Like, there's no one strategy that's gonna do it for you all. Learning multiple strategies just get you better. Lunar, that's another strategy that you guys might look into that can help you trade. Like, that's why I use bots, I use indicators. You know, I use whatever I need to use to make me money. And it's fun. Trading is fun. It's not as hard as people think it is or how they make it out to be. It's hard for them because they're trying to make too much money. They trying to get five, six, seven, $800 a day when they never even made 100 consistently yet. You know what I'm saying? Like that's why people say trading is so hard because it's the mental side of it. They're trying to do something that they've never done or they've never been taught to do before. You know what I'm saying? I never try to teach myself. I immediately paid somebody.
I will say this though, but trading it does expose yourself, like who you are as a person, because it involves you or allows you to evaluate yourself. Like if you're a greedy person, or if you're not disciplined, or this and this that, like the market is going to show it.
Yeah, and that's why they call them evaluations. Not because you're trying to prove to them that you can trade, but you got to prove to yourself that you can trade, that you can do this. You can control your emotions. You can build that consistency, not be greedy, know when to get in, know when to get out. The hardest part about the market, once you learn the strategies and what works for you, the hardest part is stopping. That you're gonna battle. I battle with stopping now. Like if I get out the market and I'm like, man, I still want to trade, I watch other people trade on TikTok. You know what I'm saying? I got a 250K eval that I've had for 6 months. I don't even have it to pass. I just have it to play stupid trades and when I just to get it out the way. It's a
Hmm.
mental game. I literally have a 250K eval that I would just place a dumb trade on just to get it out the way. You know what I'm saying? I do little things like that just to keep me focused on the ones that are making money. You know what I'm saying? But I bought it at when they had that sale. It's only $15 a month for that 250K eval. I just let it just keep renewing, do a stupid trade just to get it out the way. But do whatever you need to do to focus. That's healthy, first of all. Don't do anything unhealthy to try to stay focused. But it'll be there. Opportunity is there. And anytime DJ Vito pops in the live and tell y'all trade, take it. Go take it. Because that man told us 622 buy, and look where it went by the end of the day. And it ain't even the end of the day. This is just 10 o'clock. He gave us that trade at like 8 something. He said take the buy and just stay in that trade. He swing trades.
I was
So
about to ask you that. Is he a swing trader?
oh yeah, DJ Vito swing trades. And when I say swing trades, I'm talking about 90, 100,000 a week.
So, but you got to have a large cushion for swing trading though, because
Yeah,
you're
yeah.
holding
So
it.
so when he gives us a trade, he understands that we are day traders and we don't have that cushion.
Mm.
So that's why when he popped in there, he was like, I will buy 22 and just hold it. Just hold it for the day. And he let us know, just hold it for the day because he said the market had already hit its low. And he was right. The market did not come back down the rest of that day. He said the market already hit the low, which was right here. Divergence popped up. And he was like, at 622, if it go above 622, I will buy and leave and just leave it. And I told him, I said, I'm gonna do it in micros. He said, hey, whatever you gotta do. I did it in micros. When I closed that micro trade, I was up 200 something dollars in micros.
Mm. So what determines a swing trade? Is it the time that you're taking the trade, like, or is it just you're holding it over days at a time, like,
Yeah,
or the
yeah,
time
he
period?
holds his over days. So
Okay.
what swing traders look at, they look at the monthly chart, the weekly chart, and the daily chart. Day traders look at the daily chart, the 4 hour, the 1 hour, some will look at 30 minutes, some will look at 15 minutes. We looking at daily and down. Swing traders look at daily and up because they're holding it over time. They're not like Vito, V chip or I forgot what V chip social media is, but those dudes are swing traders. I've seen V chip sitting here talking. He up $80,000 and he's not closing his trade. He just sitting there talking to us. I'm like, you're not gonna close that? He's like, nah, it's still going up.
Oh, he got money, money.
I'm like, all right, dog. Yeah, and he be in a trade with 10 contracts in a swing trade. He also has a bot too, but his bot is expensive as crap.
So that's the next goal I need to add to my Infinity Gauntlet. The next
What, swing
song.
trading?
Yes, sir.
Oh yeah, yeah. Well, what you can practice with a micro. Just do one micro.
Oh, okay.
So what I do at night, I pick an area at night, a level, and I will take a short or a buy. I would put a resting order, and I'll go to sleep with one micro. You know what I'm saying? I
Mm.
know I usually wake up. Now I did it in Sim for like 3 months, and I just wrote down, okay, I took a trade off of this resting order, and it made this amount, or it lost this amount. And by journaling, I realized even if I was 50-50, I still made more money off of the overnight short or overnight trade that I did. Even at 50-50, I still came out on top at the end of the month. So I started doing it with my PA. I would take one micro on the PA and just place a resting order and go to sleep.
Are you journaling the highs and lows of each day? also? Like when
Yeah,
you're
yeah,
okay.
my journal's marked up. So I have an ATM strategy for my swing trades, micro. This is my ATM strategy for my micro. Stop loss is 80 tick stop loss, zero profit target. And then I have an ATM strategy that once it goes 50 ticks into profit, it moves up 10 ticks. Once it goes to 50, it moves up 10 ticks. Once it goes to 60 ticks in profit, it trails it. So once I get 60 ticks in profit, it trails it. So 60 ticks in profit is only $30 in my with one micro. So once I make $30 in micro, it starts following behind it if it gets more and more than that. And I normally wake up with anywhere from from $30 to 120 with one micro.
Gotcha.
And I just do that every night before I go to bed. I pick one of my PAs that have a nice little cushion in it, and I'll just take one micro trade and I'll go to sleep. And I normally wake up if I wake up and it's still running and it's in profit, I'll just let it run. I'll move my stop loss at a decent area, and I'll just let it run while I'm trading all my other stuff. But normally I'll wake up and it's already been done. But since I have an ATM strategy set on it, I normally 9 times out of 10 I'm gonna wake up with at least $30 because of the way at least $5 because I have it once it goes 50 ticks in a profit, I have it move up to 10 ticks. So with one micro, that's $5. Not that much, but it's $5 that I made while I was asleep. You know what I'm saying? So as long as it gets 50 ticks in a profit, I'm gonna get at least $5. If it gets 60 ticks in a profit, I'm gonna start making 30, $40 because it's gonna follow behind it after that. And if you can make $5 a day while you sleep, let's do the math. Let's do the math on that. $5 times 240 trade days a year. That's a smooth 1,200 a year. Making $5 while you sleep. That's a good $1,200. Guess what? Guess how much money most jobs give you in a raise? About 3 to 4% a year. You know how much that is a year? About $1,200. So your job gonna give you about $5 a day raise on average.
That's enough for a toy for your children.
Exactly. Exactly. So, $5 a day while you sleep, that's still good money. But yeah, that's the ATM strategy that I use when I take the micro trades, if y'all wanted to take a screenshot of it. And micro stop loss of 80 tick stop loss is only $40 loss. So you shouldn't be scared to lose $40. I'm about to make you some lunch. You ain't gonna get no more snack, buddy. You done had enough snacks. But yeah, anybody got any other questions?
I got a ton, but I'll tell you later.
Yeah, just shoot me a message when you have some free time. It could be today or tomorrow.
I'm here all day. I'm here all day tomorrow. Whatever.
All right. Yeah. Yeah.
I mean, just stupid stuff. Like, for instance, I can't get my indicators up. I just right clicked on the thing. Is to go to indicators, and they're all loaded there. But I hit OK. Nothing happens.
Okay. Let's shoot for 2:30 because I'm gonna make him some lunch.
That's
And
fine.
we'll do 2:30. Just inbox me though. Inbox me your email.
All right, and
So
then my like the scroll button when you push down, you're supposed to see all the open and close whatever that'll
Yeah.
work. So I figured it was my mouse, and I try to fuck with my mouse, and it still don't work. So I don't know, just stupid
Okay.
stuff.
Just inbox me so I know what email to send it for. That way I got to search the email.
Yeah,
And then we'll go from there. Inbox me. You have my text number, right?
your what number?
My text number. So
I texted you yesterday, but I didn't get a response, so I didn't know if it was correct.
oh, okay, hold on. What did the number end in?
Mine 5571.
Okay. I thought I responded to that.
Oh, I don't think it.
Oh yeah, I said I emailed Zoom link.
Got it.
I had text you first. Okay. But yeah, I just put
Okay,
copy
got it.
so you know. But
All
yeah.
right, sounds good.
But yeah, so for the students that don't have my text number, I thought I had it in the class, but it's not in there. It's 704-665-7613. So instead of hitting me up on TikTok, Instagram, Facebook, YouTube, you could just text that number. That goes straight to me for my students. That goes to my phone, like a regular text message. That way, if it's something, if you have a question right then and there, I can see it right then and there.
All right. Well, nice to meet everybody. Have a great weekend. Talk to you in a little bit.
For sure, for sure.
Hey,
All
Miss
right.
Lady,
Yep.
right off the rip. Can you tell me how much is a reset for Bull and Ox?
How much a reset for Bullinox?
It's 40 something.
It's in the 40. Okay, I was like, I don't know. I never reset. I normally just cancel and get another account because it's cheaper.
Yeah, it's cheaper to just get a new account.
Instead of reset, just cancel and get another one. Yeah, because they're at 91% off, if I'm not mistaken.
Yeah. How much did you say, Miss Lady?
The reset is about 40 something.
Yeah, it's 40 something. Yeah, so just don't reset it. Just cancel and get another one.
My question is, how do you navigate trades off the swing high and swing low?
I use a 5-minute swing high, swing low as confirmations. So if it lines up with another level, then I use it. But if it don't line up with another level in the 5-minute, I don't use it. But a swing high and swing low on the 1 hour and the 4 hour, I'll mark it as a dotted line, like that, or a dash, or I'll put a dot or a dash. You know what I'm saying? Like this right here, on a 1 hour. Let's pull up a 1 hour. Like this 1 hour right here, back then I would have marked it. So you see how the overnight high also landed on a swing high. That's why I took that trade. That's why I took that trade back here. This one right here.
Okay.
Because not only was it a overnight high, but it was also a swing high on that 4 hour.
And the
Or 1
R1
hour.
R, what is it?
The pivots.
So if it passed those, you can go for a buy or sell.
If it closes any level that you have, if it closes on the other side, whether it's a short or a buy, if it closes on the other side, it normally turns a support to a resistance level or a resistance level to a support level. So yeah, if it closes above it, you can buy from that. If it's going up, it closes above. When it comes back to the next candle, wait for the closure. It will be a good area to buy. I mean, it's not 100%. None of this is 100%, but it's more likely to happen as a buy or a sell. So always wait for the closure on the 5-minute. Because even like with this trade right here, it closed above the overnight high. The very next candle, it bounced up a couple times before it had this big drop. So you could have easily took a good $200-300 buy and then it dropped. But that's why you need to find out what your average is, because if your average is $200, okay, you could have took that buy, got 200, got out the way. Because you know what your average per trade is. But if you don't know what your average per trade and you're trying to get 500, you might not have got 500. It might have turned around and you would have lost money on it. You know what I'm saying? But know your average, get your bread, and get out the way. Wait for another trade.
My take profit would be like $50. I get in and get out. It hit the 50 quick.
Yeah, and ain't nothing wrong with that though, because once you turns to a PA, all you have to do is get at least $50 for it to count as a trade anyway.
Yeah.
So if you want to make 200 a day, all right, well, and $50 is your target, well, you need to take four good trades, 50, 50, 50, 50, done.
Yeah, that's how I do it.
Yeah, ain't
Because the
no rule that
diversion,
say you can't
sometimes it
take.
don't come down to 200. When I did it that way, it'll just give me a quick 50 and then go back the other way.
Yeah, and that's the thing with diversions. You don't know how far a trade is gonna go, right? That's why, once again, that's why you practice what your average per trade is, because once you get your average per trade, you know what you're getting better at your entries. And that's why every 6 months I run my average. Every 6 months I take 10 educated trades and I see how far it went, add it up, divided by 10. And you'll notice every 6 months your average is going to get bigger, or more. It should, if you're doing it the right way, your average should get bigger. It's just the last time I checked my average, it was like in the 400s. You know what I'm saying? But that's just how I trade, you know. But as long as you know your average, it's going to get better and better every time you try it.
Yeah, I just be looking at like people don't be really making $50 an hour. I'm not just making it in 2 seconds.
Yeah. Yeah, and look at this R2. You see how it bounced off the R2? It can't get above the R2. Those pivots are very strong as well. And then divergence popped up right on top of it. So you could have took the short from here, or you could have took the short from here. Either way, it was a good short.
Right.
You know what I'm saying? Get your money, get out the way, wait for another opportunity. But it's much easier to get 5 trades of $100 each versus one trade of $500.
And I heard you say Friday about the blue lines and the yellow lines, like you can buy and sell from those.
What do you mean
They
yellow
like
line?
follow you like these. What are
Oh,
they?
the VWAP. Yeah, you see how it moves?
No, it's like 3 lines that come always be together. Is it the view?
Talking about these?
The gray lines.
All these are VWAP lines.
Oh, they all VWAP lines.
Yeah, all these are VWAP lines. All these little circles that I highlighted. Those are all VWAP lines. All these little white dash lines and stuff like that. All the curvy lines. Those
Yeah.
are lines. Because the VWAP moves, but it adjusts to where the market is.
Oh,
You
okay,
can take,
okay.
and
I
if
thought
it's
the
if
VWAP
it's
is all
yellow,
blue
if it's
line.
yellow, you're looking for a buy. If it's purple, you're looking for a sell. But once you see right here, once it crosses above that purple area, it turned yellow. So now we're looking for a buy. You could have bought it here. It would have dipped down on you, but ultimately, look how far it went up. So a lot of these trades that you can take is better when you start building your cushion. That's why I want y'all to get 50 to 100 per trade until you pass your eval, get your payout, and start building your cushion. Because once you have a cushion, you can sit in those trades longer and make more money. That's why I want you to practice with micros, because micros is going to build up your patience while you're in a trade. You're not gonna be like, oh, let me hurry up and get out because I'm down $20. You're not worried about no $20 loss. But in the minis, down 200, you're like, oh shoot, I'm down 200. You know what I'm saying? That same trade in micros is only $20. You're not tripping over $20. You could sit in the trade a lot longer in micros than you can in minis. But at the end of the day, it's the same movement. It's the same ticks. It's just a different dollar amount. But they move the same.
Okay.
Yeah, it's mental. It's just a mental thing. You looking at the dollar, I'm looking at the ticks.
Can
You know
you
what I'm saying?
explain real quick about the central pivot, the R2 and the R3? How are those related to our levels? I'm new at this, so I'm still trying to figure that part out.
Well, they're not really related to
How
our
do we
levels.
move the history
So I'll pull it right here.
levels?
I'll pull it right here. Hello, is it? Okay, so all right, market pivots is a key price level used by traders to determine potential support and resistance areas for the current trading period. It is calculated based on the previous period high, low, and the closing price and serves as a benchmark for gauging market sentiment. So it's based on the high and low and closing of the previous areas. So that's why every day the S1, S2, and the central pivot change because it's based off of the high and low and closing prices of the previous period. So the previous day. You can, and that's why at night I also use, instead of marking up my overnight high and low, not strategies. I also at night the indicator I use is, where is it at? Where is it? Is it the right here? Prior day OHLC, open, high, low, close. So you could use prior day open, high, low, and close if you're not trading the New York session, right? Because New York session, we mark the overnight high, overnight low. If you're not in the New York session, you could do prior day OHLC, and you will see that it lines up with the central pivot, the R1, R2, R3, because those are based off the previous high, low, and close.
Oh, okay, perfect. Thank you.
No problem.
My other question was, it wasn't about the VWAP. It was about the Don chain. That's what I was
Oh,
trying to
Don
figure.
chain. Okay, so Don chain, I only use the Don chain if I'm at an area where I can't find a level. Like so in this, you see in this area up here, there's nothing up there. Even if I look back, if I look left, there's not a lot up here to really mark off. I have to go way back here to try to find some levels, right? So if the market is way up here, I'm going to use the Don chain because the Don chain is going to help me find higher high and lower lows levels to place trades off based off all this back here. So I only add the Don chain if I see the market is in a place where I don't see any of my manual levels, like my triple threat, my gap strategies, or stuff like that.
So
When
how
it
you work the Don chain?
Okay, so I'll pull it on here. That's a 60-minute. So now when I do a Don chain, I usually remove some indicators, so that's why it's not too much going on. But Don chain right here, I don't change any settings on Don chain. Let me remove the VWAP. That way you can see it a little clearer. Okay, so the Don chain is right here. So this blue line, these are the Don chain. All the Don chain is doing is following the higher high and the lower low. So these aren't this blue line at top is all the higher highs. Every time it goes higher, it changes. See, it's right here, it's leveled. Every time it catches something that goes higher, it'll stay right there. If it goes lower, it's not going to move. It just stays right there if it goes lower. The central line is just the in between, is the median. Just like the central pivot, this is the Don chain central pivot. You notice the Don chain matches up a lot with the swing high and swing lows because it marks off the higher high and lower lows. So as long if the market is above the central Don chain, I'm either going to buy it off the central or I'm going to sell it off the high. Once it crosses below this orange line right here, I'm either going to sell it from the central or buy it from the blue line. If it crosses, like down here, it was in the middle of it. So I'm buying every time I'm here, I'm buying it. It comes down, buy it. Come down, buy it. Buy it. Once it keeps going up, now it crossed above it. I'm buying it from the orange or yellow line, and I'm selling it from the blue line at the top. And it moves based off the higher high and lower lows. So
Oh,
but I only use this if I'm in an area where I don't have any of these yellow, orange, and blue lines, or I mean yellow, brown, and red lines. So if the market is all the way up here, then I'm going to add the Don chain because I need to find some levels up here.
okay.
Yeah, I only use it certain times. I don't use it that often because all these indicators. If you use too many indicators, it's just going to confuse you. You're like, which one do I listen to? You know what I'm saying? You don't want to get in the habit of having a whole bunch of indicators on here.
Right.
Hey, Mr. H.
Mhm.
Okay, like I didn't put in these levels and I didn't did it for a long time. How do I erase the history of them?
Oh, just go right here. If you want to just get rid of all of them real quick, you go to drawing tools, and at the bottom it says you can either hide all or just remove all objects. Is all the way down.
I'm not talking about them being on the chart. I'm talking about yeah, the history of them.
What you mean by the history of them?
Okay, I'm trying to think. Oh man, I'm trying to think.
Because once you remove them, they shouldn't be there anymore.
No, I understand what you're saying. I understand exactly what you're saying. What
Mhm.
I'm saying is that when I go into and I put a level, I put a line on there, and so I'm trying to think exact because I ain't got my computer up.
Oh, so let's use this line. So this line right here is a manual line.
No. Let's do this. Let's put a new level line up. Do that first.
Boom, right there.
Yeah, but see, you using a hotkey, man.
Okay, so drawing tools.
Yeah.
And let's go to drawing tools.
All
Uh,
right. Horizontal line. Do
yeah, horizontal line. Okay.
right.
Right. Click the horizontal line. Place it right here.
Okay, so now do this here. Double click on that horizontal line.
Mhm.
Okay, and see to the left, ain't that's the history of all those horizontal lines, isn't it?
Yes, that's all the lines that's on there. Once you do, if I click on this and I remove this line, click
Yeah.
remove, it'll remove the lines that's already here. But if I
I
delete, if I delete the line, they won't be there no more.
okay, so but what I'm saying is all those levels there, that's your history of all the levels, right?
No, this is all the lines that are currently being used right now. They're all on. These are all the ones that are currently on my chart.
From 6 months ago?
Yeah. Yep. Because I got levels down below that the market hasn't got back down to.
Okay. All right. All right. But if I wanted to delete those, I just have to go through it one at a time and delete them.
No, no, no. If you want, well, yeah, if you want to delete certain ones, but if you
Yeah.
want to get rid of all of them, then yeah, the fastest way to get rid of all of them is just to go to drawing tools and right at the bottom says remove all.
Okay. Okay.
But if you, so what you can do, you can, if you double click the ones that you want to keep, you can just lock them in. Just hit lock.
Hmm.
Just lock the ones in that you want to keep, and then go to delete all. It's going to delete all the ones that aren't locked.
Okay.
So yeah, so if you want to keep like 5 or 6 levels, like the overnight high, overnight low, keep like a couple levels, just lock them, and then right click drawing tools and erase all, remove all. It's going to remove all of them except the ones that are locked, and you can basically start over. So
Right.
every month I lock the ones that haven't been touched, and then I'll just delete everything and just keep the ones that haven't been touched yet.
Okay. I
Yeah.
got you.
So that's the best way to do that. All right. So we
I
good?
got one more question.
Mhm.
So Sunday is the Asia market, right?
Yes.
So what determines like a trading day? It's gonna be the next day or out there every market?
The Asian market opens up around about 8:30 at night, and I want to say it closes at I think 2 in the morning. I got to look at the actual times, but that's their range. And then around 2:30, England opens up till about 11 o'clock our time or Eastern Standard Time, 11:30, and that's England. And then New York is 9:30 to 5, or actually it's 9:30 to 4:05 is the last institutional trade, but it closes at 5 o'clock.
So do the prop firms take okay that I'm in the Asian market? Is that one day? The London market is one day.
No, no, 6 p.m. is one from 6 p.m. that night all the way till 5 o'clock the next day is one day.
Oh, okay, okay.
So if you place a trade at 4:50, when 6 o'clock hit, is a whole nother day when 6 p.m. hits. But if you place a trade at 6 p.m. at night, when you wake up at 9 o'clock in the morning, that trade is still gonna be it's still gonna be there.
All right then.
So
Yeah,
essentially, if I
so
trade Sunday night,
yeah, so the
my
market overall opens up at 6 p.m. at night.
so Sunday night till the next day,
Yep.
um, till Monday evening at 6 p.m. That's
Five,
one day for
five,
the eval.
5. So from 6 p.m. at night till 5 o'clock p.m. the next day, that's one day.
Okay, that's what we're just trying to
Yes,
clarify.
yeah. So 6
Just for the
p.m.
eval.
starts a new day.
Okay.
But once you start putting cash in there, you can actually hold a trade from 5 o'clock all the way after. You can hold it for days. You just can't hold a prop firm past 5 o'clock. But you can hold a cash trade past 5.
It seemed like the market closed at 3 on the prop firm.
Well, the last trade of the New York is at 4:05. That's the last institutional trade, but the
Are you
market don't close till 5 p.m.
are you Central or Eastern time?
Oh yeah, yeah, yeah. If he's central, then yeah, about 3. That's about right.
Yeah, we're central.
Yeah,
Yeah, it's 3 o'clock. I'm Central also. So
yeah. So based off of I call everything based off New York because that's the time that they go off of.
Mhm.
Yeah, sorry if I be confusing you if I say 5 o'clock.
Yeah, because I was looking because you say you be on the computers in the morning at 8:30, so I'm always waiting till 8:30. But then one time I looked up, it was 7 o'clock. You was already trading. I'm like,
Yeah, so
oh,
yeah, so
I got to reset my schedule. It's 7 o'clock now.
yeah, so since I'm Eastern time, and the New York market is based off Eastern time also. So even if I was in Cali, I just like when I travel, when I used to trade and travel for work, I kept my computer on Eastern time. I didn't want it to change based on where I'm at. I don't care if I'm in another country, I have mine based on Eastern Standard Time because I like to keep up with the New York time.
All right.
That was just easier for me because I'll be in California and my time will still be on Eastern, so I know what time the market opens instead of trying to do the math. Like, okay, yeah, that's about 5 o'clock in the morning. 6. Yeah, I ain't got time for that.
Right.
But that's how that goes. All right, so we good?
Yeah, I'm good. Thanks, though.
All right, outstanding. Good class, good class. And it is recorded, so as soon as it mixes down, I will add it. Nice, I'll share. All right, so I will see
Real
everybody
quick,
Sunday. Oh, good.
did you ever figure out the Discord deal? Like, can you go live and stream on Discord, or
Yeah,
you
so
not?
so what I'm going to do, once I get to a certain amount of students, I'm gonna just when I go live in the morning and at night is gonna be on Discord.
Oh, at live and in the morning is gonna be on Discord now?
Yeah, instead of TikTok.
Oh, okay.
Because I'll be wanting to give y'all so many trades and explain per trade so that y'all can make more money, but I'll be having a bunch of people that be just trade hustling. They
David,
get there
other
for
thing.
free just trying to get some free money. And I'm like, ooh, I don't want to explain this trade too much because they're not students.
What you just say? I have walked away. I'm sorry. What you say?
Oh, once I get to like 250 students, I'm gonna move more to doing live under the Discord for just the students.
Gotcha.
And
Awesome.
so the pre-market I'm gonna be doing there at night. I'll be on there because I still trade with my mentor at 9:30 to 10:30.
So would you ever consider just doing night sessions now on Discord?
Well, because I go live on TikTok, that is to
Okay,
get more students because I want to get to that. I want to get to 300 because we're almost at 2 now. At
gotcha.
300 students, I'm locking down the enrollment to where I can just focus on the Sparta 300. So once I get to 300 students, I'm locking down enrollment, and the only way you could join is if you enroll through one of the students.
Copy.
Because all the students will have the access to be affiliates. So if somebody wants to learn, they will have to be an affiliate through one of you guys. I'm locking down enrollment once I get to 300. That way I can just focus on y'all 300, and I don't have to do one-on-ones
Oh,
anymore.
don't get
Focus on
put the
y'all.
mic on.
Huh? Oh, but yeah, that's the goal. So at 250, I'm just gonna do lives on the Discord for the students, so I can actually be almost like a trade room
Go ahead.
just
Mr.
for the
H,
pre-market.
Go ahead.
Mr. H, can you hear me?
Yes.
You know Marvin got his spatial class, and it holds a lot of people. He's an affiliate, isn't he?
Yeah, he's an affiliate. Well, I have to add him again because we just switched over everything to a new platform, but it'll take me 2 seconds. I can add him. Yeah, so it ain't gonna take long at all. I can add him as soon as we get off here.
Affiliate. Oh,
Okay, what was that?
Thank you.
Oh yeah, no problem. Yeah, I can add him as an affiliate now. Yeah, but everybody should be on a new platform anyway. Yeah, because Teachable was tripping. But other than that, we good?
Good job.
go talk with it. Whenever you ready for me, I'm ready.
Okay, for sure. For sure. Yeah, so let me go feed little man and then I'll do that 2:30, about 2:30. It was you and what's the name? Repo. And we'll just do a Zoom together and I'll help both of y'all.
Okay, sounds good.
All right, for sure. Talk to you guys
Peace
later.
out.
Enjoy the rest of your
Have a
weekend.
good day.
All
Thanks. Bye,
right.
everybody.
See ya.